Hey, what's going on, traders? Hope you guys are well today. This is Chris from Vertical Trading. In today's video, we're going to talk about bond trading to some degree, to the degree that I can explain it. I'm not an expert, nowhere close. Actually, I just started watching the bonds. So if you enjoyed this content, let's get to it. I'm going to try and show you a few things that I figured out, things you might want to watch out for if you start trading bonds or Treasury yield futures. In this video, I'm going to talk about the Treasury yield futures that trade on the small exchange, but I'm also going to be showing you the traditional bond futures, and that's what we've got on my screen right here. So these are 5 different contracts. In the middle, we've got the 10-year note treasuries, and then the 5 years, 2 years, all the way on the left, 30 years here, and then the ultra bonds on the right. This is, I guess, what some traders would call the yield curve. So we have short dated bonds, 10-year bond, and longer dated bonds. So on average, the bonds move together similar to the way the stock market indexes do. So lately I've been watching, you guys know I'm more of an equities guy, but for example, if you watch the NASDAQ, it's pretty important to watch the S&P next to it because they move in tandem. Now when they're not moving in tandem, all of a sudden things become a little bit trickier. Now when you're watching the bond markets, generally it's important to watch how things are moving all across the yield curve. So this data here is coming from Sierrachart, and we're going to go over to my other screen here. What we're looking at is some daily time frames of all of the 4 bonds here. So we've got the 10 years on the top right, 5 years here, 2 years here, and the 30 years. Now you can see that these charts look very similar because they're correlated markets. However, there are some slight discrepancies. I just wanted to highlight some of the increase in volatility that we've been having in the bond market lately here. And actually right now, I'm watching the bond market as we speak, and it looks like I'm about to get filled on a bid here at 22.5. It doesn't seem like it happened. Let's take a look at what those 2 years are doing here. And you can see the 2 years are pretty much stuck, but we've had a considerable amount of volatility in the 2-year yields. And you guys should definitely check that out if you can. And the way I would do that is by using the 2-year yield futures on the small exchange. So 2YSME, that's the product. And you can see, you know, this is a daily chart, but look at these swings. Some days we've had like 40-cent ranges here. And for every cent this thing moves up or down, you make or lose $1. So that's kind of a lot. And also the margin is really low for this contract, especially with interactive brokers. It's $165 per contract to trade this 2-year product here. Definitely something to be watching for if you want to catch some of the volatility we've been seeing in the Treasury yield futures market here. And as you can see right now here, we've been kind of in this consolidating range. It seems like the 2 years have taken a bit of a break, and the 10 years and the 30 years are kind of taken over for the bulls here. So I'd be curious to see how these 2 years pan out from here. Are we going to see some more consolidation, or is there a chance for higher interest rates pretty soon here? What do you guys think? Leave it in the comments down below. If you found this video educational, let me know. Hey, what's going on, guys? We're going to do a little bit of a market recap here today now. It is now Thursday, October 7th, and we've seen some pretty nice movements in the markets today. Volatility is not as high as it was yesterday. In fact, I would say it's been pretty much a drastic shift. So basically, I'm going to go through some of what has happened here today and yesterday, some of my thoughts on the stock markets, bond markets, etc., and maybe I'll even review a couple of trades. So as you can see, I've changed my chart book yet again. If I received $1 every time I changed my chart book, I'd probably be the richest man alive. But that's no big deal. Now, I'm just going to kind of openly talk about my thoughts about what I've been experiencing the last 2 days. So I'll be honest with you guys, there's been a lot on my mind the last few days. And one thing's for sure is that trading requires you to have a clear mind. You know, if you have a lot of things going on in your life, things that you have to take care of, and you basically, if you have a list of stuff to do that's this long, I would make a bet that you're not going to trade very well. You're going to get tilted easily. You're going to get FOMO easier. You're going to be more careless overall. And these are some things that I experienced, especially in yesterday's trading session. And what I did to kind of get through it is, number one, I started to take care of the errands I had to take care of. And again, I'm not done. The best thing is to do is to just not trade and try to get through what it is you have to do. For me, it's often stuff related to the YouTube channel, because what has happened recently, I'm being honest with you guys, is that I've received a lot of offers from sponsors and I've gotten pretty lucky. I'm disclosing this openly with you, but actually IB reached out to me and they said, hey, we want to pay you because you did a lot of videos for us. So if you guys want to support the channel, click on the link in the description. It's going to link you to their website every time you click on it from a unique IP address. Now that's basically it. Now apart from that, there's also just been a lot of stuff I've had to take care of here. And again, guys, I always have to stay transparent with my viewer base, is that the point of this YouTube channel is simply to share my experience with trading and also share my expertise when it comes to configuring platforms and helping other traders to do things that they want to do when it comes to configuring trading platforms, customizing indicators, and all of the likes related to that. Trading is a very tough thing for the majority of people to succeed in, and there's so many reasons for it. That's why people make entire podcasts about trading psychology, because of how much mental strain goes into actually trading. So I'm going to recommend you guys to listen to the book The Disciplined Trader by Mark Douglas. It's a classic book, but I would say out of all the trading books I've read, this one is the one that is resonating with me the most right now. It's just a great book, and I suggest you check it out. You can listen to it in audiobook format online. All right, let's talk about the markets here. Now, we've seen a considerable rally here in equities, and we're going to also take a look at is what the smalls are up to here. Look at what the yields are doing today here. The 2-year yield up 4.5% up to 313 on the small exchange, and 10 years up almost 3. Now that's interesting because oil has consolidated a bit off of its highs. It's still up 1.5 on the session, and if we go up and look at the equity markets, that's what's been leading the show here. The Russell up 2%, Nasdaq up 1.5, S&P's up 1.4 here. So let's just take a look at some of this context, and you can see that ever since yesterday, basically the market continued to rally into the evening and into the morning as well. So quite very much interesting action, and there was some key areas of context that the bulls needed to regain in order to gain control of this market. We're actually going to go over to our daily time frames now. Take a look at the S&P and the Nasdaq futures here, and you can see that the S&Ps are approaching a daily battle zone, a daily area of context. But again, with 4 inside bars in a row and then the slow float up to higher highs, this rally, I would say, was not totally random. I would say it totally is a regular, normal rally. I'm not much of a bigger time frame guy, but it could actually be a bear market rally if you look at the structure of this market. So now we have these 43.33s to about these 24s here, which haven't traded yet on the session. And that's our sort of area to be watching overall here on the daily chart of the S&Ps. The Nasdaq is not even close to its daily resistance yet. You could say that these 999s here are something. So I would say 999s is something to be watching, as well as these 177s. And that's pretty much it. Now, honestly, guys, no one trades the Russell here. If you trade the Russell, leave it in the comments below. And I just realized I had 2 cameras going at the same time. That's weird. There's interest rate futures for you guys. You can see the 30 years are leading the way, 10s in the middle, and the 2s shorter term are in a trading range here. But again, quite a decent amount of movement here. Yesterday we looked at them, they were trading around $3. Now we're around 313 here. 13-cent movement. Definitely a great introductory product for traders wanting to learn more about futures, and the fact that they have a uniform tick size. All of them are $1. Those $1 tick sizes on the smalls are pretty attractive. Pretty soon here you might start seeing me trade them live on the stream. So let's talk about some more stuff here. As you can see, guys, I have changed my chart book yet again. And a lot of you guys are going to say, Chris, why are you always changing your chart book? All you ever do is tinker with your charts and you're never trading. Now, one thing I could say after yesterday's trading session and reviewing yesterday's trading session, number one, yesterday, October 6th, the volatility in the marketplace was very high. And I, for whatever reason, wasn't prepared for it. I was feeling kind of tired. And I guess maybe I'm going on a tangent here, but I'm going to start experimenting with intermittent fasting in the mornings with the goal of trying to be more clear-minded, clear thoughts, and better overall focus levels in the morning. And today I did sort of experiment with it, but actually I didn't fast in the morning, but what I did is I had a very light breakfast, a bit of Greek yogurt, an orange, and a banana, and a bit of green tea, and that's all I had all morning, and I felt perfectly fine. I do think it's logical to say that if you intake a large amount of calories before a trading session, you're not going to be nearly as focused because your body's using that energy to digest the food you just ate, and now you're trying to pay attention to a market that's ripping around 10 points at a time, it's not going to work very well. So overall, the volatility was very high yesterday. I found myself tinkering with my chart books more than actually paying attention to what the market was doing. And I'm going to openly say it. My least favorite thing about Sierrachart is exactly that. It's the fact that you can get into the habit of tinkering with your charts for hours. And when the markets are closed, this is perfectly fine because you're tweaking certain aspects of your visual setup. But most of the time, what you're doing after hours is you're improving on stuff that you already have going. But the problem is if you're starting to do this when the market is live trading, then you're obviously going to miss opportunities. So for me, that's my least favorite thing about Sierracharts. If you can get past that, then it's still the best, obviously. So I didn't trade very much yesterday, and again, high volatility. Now let's go over to today. And today I would say it was a different cookie. Now you can see, first of all, how I changed my chart books. As you can see, I've simplified the charts and I've put a greater amount of focus onto the DOM. Now I'll tell you why I did this, because I've been speaking with a few different traders over time, and a couple of them claim to be ex-prop traders who have shared with me some screenshots that, well, kind of blew my mind in terms of profit statements. And basically I've come to the realization that the most important info when it comes to trading the market is actually what's happening right now. And it could be argued that anything else other than what's happening right now is not really relevant to trading the market. A lot of people will be staring at larger, bigger picture charts, volume profiles, and all this stuff. But at the end of the day, I'm trying to improve my view on the current trading market, and I've realized that it actually requires a lot of focus to pay attention to live markets, and I think this is why traders prefer to pay attention to bigger picture ideas, because it gives them more time to plan the trades in and out, etc. But yeah, I'm definitely trying to simplify the visual layout as much as possible. So as you can see here, I've replaced those order flow charts with simple 1-minute charts and just showing the difference between the ask and bid volume as basically the only indicator on the chart, as well as the highs and lows of 15-minute bars on top of the 1-minute chart. But that's really basically nothing. The majority of info is coming in right here, and then of course on the bottom left and on the bottom right, that's kind of like my momentum indicator, as I would call it. So let's go over one trade. I managed to get into a pretty nice trade here towards the end of the session, but the volatility was so light, and we're looking at the market here, it was at around 10:40 something a.m., getting close to 11 o'clock a.m. Eastern time. The market volatility was very light, and it was very tricky to trade. So the context was there. We had these 986s on the NASDAQ, and this was our area of context for the bears. Contextually, this was the right way to be looking. However, the volatility was so light that it basically was very hard to hold a trade at all. So basically what we're going to see is how I entered this trade. So the market was valued roughly around these 86s, and then it shifted down to about these 83s for quite a while. So you can see the market's roughly valued around 83s. So I'm looking at how the market's going to be trading when it gets above to these 88 to about 90.5s on the upper end. And basically this is how this played out. So I'm short biased. The context is there. The order flow came in up to these 90.5s, failed it. Actually, we traded up to 91.5, and then we're starting to trade back to these 88s. So let's take a look at this execution right here. So again, 88s, and the scratching range would be about to 90.5. Okay, so you can see here we're about 90.5s offered on a downtick, and I'm listening always to buy trades, and I'm looking at how the market reacts to the trade. So then I see the market starting to fade down here. I'm gonna look to get filled pretty soon. So I'm seeing how it's fading, and I'm also watching how the S&Ps are trading into a similar zone here. So I decided to take the short down at 88. We're in the green immediately on that trade. And again, getting back to the fact that the market volatility was very light here, it was quite tricky to trade here. So my plan was basically, as long as the market is still offered 90.5, basically this trade is perfectly fine at this point. So we see a slow fade. I'm in profit. I'm looking at the structure of the market, and I'm expecting the market to at least consolidate down to about these mid 70s. You're talking about 75s and something. And of course, there's a chance it can take out the low of these last 15-minute bars, but again, less likely. As you can see here, we've had a passive buyer earlier in the session. So I'm not going to just bet that the market's going to flush through everything here. I'm going to want to get paid before that. So you can see I'm clearly in a profit here of 6 points and something. And what's going to happen, actually about 8 points there, down to that even bid, 80 evens. So it could be argued that I made a bit of a mistake here, not taking the 8-point profit on the even bid, looking to get paid at that even bid. Because I was seeing this as a bigger picture trade, I was willing to hold it. So I held through a chop at this point, and the market did not trade my entry again. And you can see the volatility is very light. We're getting a lot of chop, and there's one big rotation right there. Now this rotation here can easily squeeze out weak holders. And again, I was watching the correlation very actively here. If these S&Ps were going to start bidding above these 19s to 19s and a quarter and a half, it would be a little risky to hold this because it was a good chance we're going to pop those 90 and a halves another time. But what happened was it popped up to this area very quickly, traded volume on the ask, and then it started to fade. And every time I would hear volume on the ask, I see a downtick in the price. So for me, that's perfect information to stay in the trade. So again, we get another chop. Sooner or later, it actually comes to test 90 once again. But again, as long as 90 and a halves are not bid, I'm still okay. Now, it could be very much said that in a faster market condition, this trade had to be cut eternities ago. But because this is a slow market environment and slow volatility, you have to kind of hold on for dear life. So you can see that I was about to scratch it right there. We see 25 contracts trade on the ask there. And let's see if it trades again. Yeah, so we see they hit the offer. Every time they hit the offer, it downticks. So for me, that's perfectly fine. Again, let's keep watching here, 90. And this is really dangerous here. The way it's slowly bid at 89.5 against my price. I start to see the bids pull again, and now I'm listening actively to the offer side of the market. I want to hear trades on the ask and a downtick. Again, trades on the ask and a downtick. So we start chopping, and then sooner or later we start to see the same old story. It's fading back down. And this is exactly the type of trade that I'm in. I'm in a fade trade. And now here's the issue with this trade. I was not patient enough to let this trade go to target. So we start to see the market consolidate down to these 82s, 81s, 80 evens. And I'm expecting the 80 evens to get taken out. Well, they don't. It chops 80 evens again another time. It might trade 79s, and then it chops again 82s. And then at this point, based on the amount of sellers we had to some degree, and just based on the amount of chops we've already had, I think it's just an overall much less probability that it's going to continue at this point. So I decide to cut the trade, even though there was nothing really indicating that my trade had to be cut. So again, it goes for another rotation down, 79s this time, and bounces and then chops another time. And again, this is just tough markets to hold in. And then we see another rally up to those 85s, and I took it out on a buy stop at about 84 and a half, I believe. Let's just take a look. Yeah, 84 and a quarter. I took it out right there because I just wasn't confident anymore. The thing wouldn't lose the 80 bid. At this point, it looks like it's about to run through all these buy stops at this point again. But again, I just didn't have the patience to hold this trade all the way to target. And what happened after? Well, look, it goes straight for my target. My target was at 75, right under this 15-minute low here. And that's the way the cookie crumbles, my friends. Slow market conditions require you to be very patient. So, yeah, very dangerous stuff. All right, guys, if you enjoyed this video, leave a like, leave a comment. I'll catch you soon. Take care. Bye.